Well, good afternoon, folks. It's good to be back together on this breakout session, which is designed to be a deeper dive on the topic of human capital due diligence, or the people-related issues we pay attention to during the diligence process. As we get started, I thought we'd quickly go around the horn and introduce our panelists, a little bit about yourself, your firm, your geography, and anything else you think we need to know at the outset. Adam, would you like to go first?
Yeah, great. Hey, Matt, and thanks everyone for joining the panel. I'm Adam Stein. I'm a founding partner at LightBay Capital. We are a Los Angeles-based investment firm. I spent first 16 years of my career at a global asset management firm, so have been investing for about 20 years and 5 funds, and was really thrilled, Matt, when you reached out to get this group together today. You know, one of the reasons we started our firm was really to build the best team and create a focus on making maximum impact on our teams, our companies, our communities through thinking about human capital through a different lens. And so really appreciate you pulling this group together today and look forward to the discussion.
Right on. How about you, David?
Hi, great to be here, Matt. We think about human capital every day, so I'm thrilled that you invited myself as well. So thank you for that. I am an operating partner with WindRose Healthcare Partners. I've been working full-time with WindRose now for about 11 years. Prior to my WindRose experience, I had my own firm for 9 years. And prior to that, I worked for Alvarez & Marsal for 11 years, where I really cut my teeth. And then prior to that, I worked for Arthur Andersen for 6 years, where I was a manager. In my work with WindRose, my model today used to be a little bit different. I used to generally hop in on the board or in an executive management position, but I work with 3 companies intensely, and all different types of roles. I'll work as an executive chair. I'll work as an advisor to the companies. I'll go in at the outset of an investment, or I'll go in midstream if there's some issues that need to be resolved, or in transaction prep at the end. So human capital is near and dear to our heart, for sure.
Excellent. Thanks, David. And Andy, why don't you bring us home?
Yep. Thanks, Matt. So I'm the partner for human capital and ESG at Frazier Healthcare Partners. Obviously, healthcare focused private equity firm, mid-market, making investments across North America. On our just completed the fundraising of our 10th fund, so pretty excited about that. And prior to the things that I sort of manage are sort of all range things human capital. So our talent acquisition, talent development, organizational assessment, organizational development, employee benefits, compensation, all those sorts of things. And prior to being at Frazier, I was a partner at Green Peak Partners, which I know many of you know. And then prior to that, I was a organizational expert in McKinsey's org practice, doing sort of a mixture of private equity work and Fortune 100 work.
Excellent. Well, again, thanks for being here. It's great to have you all on this panel. So a little bit about myself. I lead a firm called FMG Leading, and we're a human capital advisory shop focused on the private equity space. We think about the diligence and the people-related elements of driving value with some thought and some rigor. We're excited to be part of this conversation, recognizing we're kind of at the beginning of what I think of as the early golden age of operational value creation and the people-related dimensions of value in the PE space. There are conversations happening today that haven't happened in the past. I see there's sort of a cutting edge. Even the fact that this conference exists, frankly, is an indication that there's momentum behind recognizing and valuing people systems as enhancing and accelerating the pace of value creation. So looking forward to diving into some content together today with our panelists and with any questions or comments that emerge from our participants as well. In advance of the conference, folks completed a survey whereby they were asked 2 different questions, and I thought this is a great way of setting the stage for us as we think about the roles and the way diligence plays out in various firms. So the first question was simply, what role do you attribute to some formal human capital assessment in the diligence process? And you can see how the responses here are sort of spread out evenly among thirds, from rigorously considered to situationally considered. with a group here in the middle that are saying, you know, it's important differentiator, but we're not sure we're driving it in every transaction. So I think that's an interesting portrayal of the overall space. We're not all in the same place. We're not all staffing this the same way. We're not all using the same frames and rubrics yet, but we're beginning to say, how do we bring some standard and some sophistication and some maturity to this work? Second question was about the individuals involved. You know, how does the firm go about staffing this? Who do you get the insight from? And who do you rely on in particular for human capital expertise? And again, you can see there's a breakdown here between 4 of the categories. There's a partner level leader in about a third of the cases. And again, admittedly, our sample is pretty biased because the respondents were folks who are attending this conference. But there's a partner level person sitting at the table, ostensibly on an investment committee, thinking about how deals are done. There's an operating partner involved in, you know, full third, and then there's in another third, there's a combination of either a preferred vendor or a suite of vendors. So I think that overlay provides some really interesting places to start as we think about our conversations today. If you've participated in any of the earlier panel discussions, diligence has come up on all of them, right? The reality is, in almost every sense, how we look at an investment is now being influenced by some human capital considerations. So I thought it would be a good place to start to just ask our panel, if you reflect back over the last 10 to 15 years of your career, how has the way you think of human capital as a value driver evolved? Where were you then? Where are you today relative to the evolution of the way you think about human capital dynamics as a value driver? Who'd like to go first?
Adam, do you want to go first as an investor?
Yeah, sure. Yeah, look, happy to kick it off, and it's a great question, and you know, I think of it quite a bit for us. You know, certainly that it's evolved more, you know, than changed in a significant way in our approach, and I'd say it's a bit of this maybe a two-sided marketplace, if you will. You know, we used to approach it, or a lot of the industry approached it. You know, we'd have one-on-ones with the senior leaders of the company. You know, what are the company's mission, vision, values? What's the strategy? What does succession look like? And you'd gather that information. And the perception, you know, from the management teams in many instances was, you know, perhaps this might be a pass-fail. You know, or do they like what they're going to hear? And I'd say how it's evolved, certainly from what we're seeing, is, you know, the more enlightened CEOs of our organizations are now very interested in participating and hearing about our work. You know, so it used to be something where you might ask a CEO and hope, you know, you didn't turn off the CEO from wanting to be your partner. Now these are the kind of things that really resonate and ring true to them, that you could be the right partner for them because you're thinking about things in the same way. So that's just one observation I'd share about the industry that I think is continuing to evolve.
I think I'd add, you know, as multiples have gone up, you know, the expertise that needs to be brought to the table, the different level of functional expertise need to be brought to the table, the bar is sort of heightened. You know, it's like one thing when you're going to buy something at 8x and you're going to get arbitrage on it. You could sell it the next day at 9.5x, and you can be a little bit sloppy. And now those days are gone. And so what I think about, you know, 8 years ago when I was hard to do, and, you know, and what we called in, you know, organizational review, you know, it was like, well, we could do it before the deal or after the deal. Either one's fine. We'll figure it out. We're going to give ourselves 12 months to figure it out. And now it's, if you don't put the right team with the right organizational infrastructure and the right culture on the field within the 100 days of close, like, you're already behind. And when you get to that 6-month mark, you're going to be behind your plan. And then you're going to be scrambling. And it's so much harder to make up ground late in the investment than early in the investment. So I think the biggest thing is what used to be a nice to do, if the management team said okay, is now treated like a must do with the same rigor and the same timing as you do a QV.
Yeah, you know, I agree with those comments, and it is a very competitive landscape out there, and multiples really are high. So you have to be careful with respect to the human capital component. And you know, in the old days, 10 years ago, it really was about the recruiting and making sure that you got someone with the right experience, that you compensated them appropriately and such. And now there's a much deeper dive, and there's many more conversations from the whole deal team and from other professionals that are involved in the process on a pre-acquisition basis. You really want to make sure that you have a leadership team, and again, it's more than just the CEO, it's all the senior executives of the team, that you have a leadership team that's aligned and engaged and can actually grow the business. And you really need to figure out on a pre-transaction basis what leaders need assistance, what leaders maybe not last in the organization, and what holes you need to fill, and incremental holes in order to drive growth within the company. So it really is, it's a critical component, and there's much, much more emphasis on it today than there was 10 years ago, no question about it.
And I resonate with what each of you have said, and I guess my add to it is also the tee up to the next question, which is, as I look back over doing this kind of work for a number of different investors across the continuum over the last 10 years, the conversation is really heavily focused on management team quality, right? We're getting the right people, and even more so focused on maybe CEO, 10% CFO, but it was, are we buying the right team? Are we backing the right team? And we hired the Green Peaks of the world or the FMGs of the world to evaluate those folks and tell us whether they were capable enough. What I've been encouraged by is the broadening of the definition of human capital to be much more encompassing of things like structure and culture and key talent roles and even execution model and other things that are very much people-centric, but frankly, typically outside the realm when we say, hey, let's make sure they pass a Watson Glaser or they have a, what is their Hogan type, which again, I would call that the sort of the 10-year-old way of thinking. So my follow-up, that was a long way of teeing up the follow-up question, which is, as you think about pre-transaction human capital related diligence, what do you consider in addition to management quality, right? So we're all kind of looking at management quality. What else are you looking at?
So Matt, I think on some things that we look at, so we have a framework like similar to your framework, but we're looking at org design and the alignment to strategy. We're looking at performance management and maturity there. We're looking at, compensation structures. We're looking at their recruiting processes at scale, onboarding at scale. There's sort of a series of talent programs we're looking at. We're looking at the cultural alignment. If, for example, we had a recent deal where, we're transforming a specialty pharmacy manufacturer into a CDMO, which is basically taking an innovation business and turning into a services business. So it's all about where are they at now, what's their maturity, and what's going to need to change in order to enable the the realization of the investments thesis. So I think it's a myriad of things, and it's building off your previous question. There was I remember 10 years ago or 8 years ago, what people used to do when you look at the IC deck is they would lift the one page around the management team that the title of the slide was always experienced management team ready for the next phase, and then we just move that and put it in the investment committee deck, right? And now you're seeing investment committee decks where it might have 15 pages on the various aspects of human capital and what investments we're going to make and how are we going to phase them, what has to get in the 100-day plan. So it's kind of,
that's a great example. Yeah.
Yeah, I'd echo a lot of Andy's comments, and I'd say we always think about opportunities in terms of undercapitalization, and in the traditional sense, right? Undercapitalization would be something folks would think is balance sheet related, right? Over leverage or founder bootstrapped business, and I'd say where the shift has taken place is really undercapitalization, really being thought through the lens of human capital. And so where we'll spend a lot of our time in our assessment, in our due diligence, is really confirming we have alignment of vision, with the senior leadership team about, what the hopes and dreams and direction of the company should be. And then, really focusing on that resource allocation and gap analysis and really confirming there's the same commitment to wanting to build and invest, in a high quality team. And I think sometimes the friction that gets created or unearthed as you get to know your partner is, thinking about human capital through a lens of operating expense or investment. And I think, building on your 10-year question, right, I think that evolution is well on its way, that, these are investments as opposed to, operating expenses that no doubt will have impact on short-term EBITDA.
Yeah, you got some great comments. I don't have an awful lot to add to that one, but I love the analogy, basically, of thinking of the human capital aspect as an investment. We think of it as an investment. When we talk about investments, we're not talking about factories. That's not the business that we're in. We're talking about people and where we need to invest our dollars in order to move the value of the company and grow the company.
Well said. We're going to cover a couple more questions here in a minute, but I just want to remind the audience, if you have a question you'd like to kick in front of the panel, use the chat feature and stick that up there. We'll make sure we keep our eyes on it. As I participate in conferences like this over the years, what I tend to take the most from or get the most out of is the stories, the anecdotes, where I can hear a little bit within what you're able to share in a public setting, of course. But if you're willing, for each of you to tell me a little bit about a recent deal or recent transaction, which was above and beyond other drivers, a human capital centric investment play. Tell us a little bit about it. Tell us about how you thought of it, your thesis. Tell us a little bit about the work involved as you did some diligence on that. I'm curious if anybody has a story to share.
Yeah, Matt, I'll relay a story that you actually know well, because we worked as partners on this particular company. But it was 100% human capital play, quite frankly. You and I have a subspecialty on what I'll affectionately refer to as crazy partners. And this was a crazy partner deal. It was a founder deal who we both have immense respect for. Terrific human being. But, it wasn't atypical of other founder type companies. Had a great value proposition, worked really hard, grew the company like a weed, but didn't necessarily invest in the people, process, technology, and culture of the company. And so, we developed a relationship over about a year with this founder. Got to know this founder really well and determined that we could work with this founder. But having said that, there was a lot of investments that we needed to make in people. And we also needed to spend a lot of time with the founder. We didn't want to take away when we acquired the company, sort of those animal spirits, but we wanted to and we needed to professionalize the company. And we had a lot of management holes. And so we worked very hard to do that, worked with the founder. And the less times you hear, this is how we used to do it in the old days, or this is how we used to do it pre-acquisition, then you're starting to win. And we've gained the confidence of the founder, and it's been a terrific relationship, but a lot of work to do, a lot of work.
Matt, we had a deal recently that some of you would know, where the previous investors had done a great job working with a founder, and they had grown the company very well. And I think they're going to call it an incredibly successful investment. But when we look at the next phase forward, the company wasn't really positioned for the next sort of rapid growth phase. So the things that are identified in diligence was they didn't really have a sales team. They sort of relied on their board members. We had to build a sales team. We had to break out the sales team from client management. So those were organizational design piece. We had to change their performance management system and change how they compensated, people for both of those things. They were really immature on how they did employee benefits. They were overpaying, a broker that was taking advantage of them. So between the time we signed the deal and the time we closed the deal, we had brought in a CEO, a chief growth officer, a new head of VP, a new CFO. We brought in a consultant that helped them save $150,000 on their employee benefits. We had changed the organizational structure. And so that's the way I think about human capital. It's like, what do we need to do to be successful in the next phase? And what can we get done between signing and the 100 days of close so that we're off and running as opposed to sort of chasing our tail?
Yeah, I'll just add one, and I'd say a lot of similar themes to what David and Andy highlighted. But yeah, look, I remember March of 2020, being in the office and wondering what are the best companies we know that might need or want our capital, and we focus on service-based businesses primarily, including consumer, which was of course most heavily impacted by the pandemic. And there's a company called Barry's Boot Camp, which some may know as consumers, which is the best brand we've come across, in the fitness category in our careers. It's a global brand. It's an extraordinary workout. It has phenomenal returns on capital, and with social distancing and a pandemic, they had to lock down their studios. So we invested in Barry's, in the midst of the pandemic, and the view of how our capital could be used was primarily to retain the best people in the organization. And so, when you think about that organization and, some of the philosophies around servant leadership and where the action's really happening, it's in the trainers. That is the product of the company. And so, using our capital not only to invest in technology and opportunistically sign new leases in an environment where, real estate once again was readily available, but really to attract and retain, the best talent in the industry, which has been one of their differentiators, is something we're really proud to have been a part of.
Those are all great stories. I'll add another one from our experience. Because we tend to work with middle market healthcare investors more frequently than any other category, we've been in a number of autism businesses over the last couple of years. It's obviously a hot space for healthcare services investors to play. I would argue that there is probably not a more human capital centric sort of value proposition right now than figuring out how to scale an autism platform. There's so much emphasis on those first couple of treatment provider roles. There's 3 positions for every qualified person, constant churn, 100% turnover is not uncommon in that space. The investor that figures that out, that appreciates how much intention needs to be put on those bases, and it's not who's the best CEO, it's not who's the best CFO. We're talking about a frontline supervisor, $40,000 a year position, maybe a recent college grad, but actually determines the significant amount of the value creation. So to me, those are really interesting conversations you completely gloss over if you're focused only on the C-suite or only on some of the macro stuff. So there's some interesting things to dig into here. I want to ask you a follow-up question, and this is a bit of a deep dive into one of the things we did 10, 15, 20 years ago. I know, Andy, you're part of Green Peak, a firm we all have a lot of respect for. GH Smart, there's others out there. We consider ourselves in that category. There's a rigorous process of bringing leaders through an assessment, and it's a controversial topic. Say, will you introduce a formal or structured leadership assessment during the diligence process? And if so, how? If not, why not? Just riff a little bit on how you see the role of structured leadership assessment pre-close.
One of the things that I think is great, what GH Smart used to do, and I'm really not familiar with them, so if someone gets upset about this and how they evolved, but what they used to do is they used to do a set of individual assessments and they make determinations of the organization about that. And I thought that was sort of fundamentally flawed. And so the way we think about it is, what does the organization need? It's an organizational assessment. It's not an individual assessment. But what we do as part of that is each interview is 90 minutes, and we take a half hour to 35 minutes and we do peer reviews of all the other executive team members. Because what you have access to that you don't in an individual talent situation is you have the ability to ask everyone, hey, Mark, what's Adam really strong at? Hey, Mark, what's Adam's weak point? Where is Adam going to struggle in this next phase? And if you position it the right way, which we do, is we just want to help Adam be as successful as possible, as quickly as possible, help tell us what is it going to take to invest in Adam. Then what I find is, and people are incredibly helpful and transparent, and then at some point you might realize, wow, the way Adam's going to have to evolve it's probably too much for us. But if you position it the right way with a honest intent around, let's start with the assumption we're going to keep every one of these management team members and we're going to help them. We would just want to know what it's going to take to make them successful. I find that's the best way to do it. So instead of making it a, kind of a classic, GH Smart like proctology exam, what you're really making it is a collaborative question around a developmental program. And that's the way you're getting the information that you want.
Yeah, I would add, and echo, it's become more a bit of a user manual, right? And how to most effectively, work with the talent, at the company. And again, I think the industry has evolved and folks are a bit more enlightened and open to investing in themselves, and certainly more willing to have you invest in them, of course. And so the idea of identifying opportunities for growth and having a partner that's willing to invest in coaching and closing gaps, and having more, check-ins along the way to support that growth is something we're seeing really much more welcomed by our leadership teams.
Yeah, and I would say that we're seeing the same thing. We don't bring in a professional every single engagement, but for those that we feel we need a professional, we will to do executive coaching and to do assessments as well. Assessments on a pre-acquisition basis and executive coaching on a post-acquisition basis, and 360s and so on and so forth. And we talk to the management an awful lot. And we spend time with the management, and we do check-ins with the management, and we ask them where they're succeeding, where they're failing, why are they failing? What would, if you're talking to a CFO, what would the CEO say about you? Questions like that. So I guess you could say that we have gotten a little more scientific, and maybe the scientific has merged with the gut.
Well,
that's where we are.
That's one of my favorite conversations in talking to investors across the spectrum is, how much do you leverage your gut versus how much science or how much quantitative are you willing to put alongside it? And again, I do think we're evolving, and I love your phrase, Adam, the user manual or the user guide. I think in the past we were trying to measure, is this person smart enough, or are they going to turn out to be, psychologically unstable, or some, ridiculous sort of, long shot downside, as opposed to saying, what kind of support are we going to need? If we're going to put Brubaker in this role and have him lead this company for the next 5 years, what kind of support is he going to need from us? What kind of a board chair? What kind of a CFO is going to bring the best out of him, et cetera, et cetera? I've been encouraged by the level of insight that these vendors, these partners are being pushed to produce. And so I think the focus, to your point, Andy, is much more on what is the organization? What's the denominator? The denominator is not random raw intelligence. The denominator is, what's our investment thesis? Can this team deliver on it? So I don't know, you want to follow up on that?
And Adam makes a great point earlier around, the really smart CEOs, the savvy ones, the one you want to partner with, they're the ones that are like, I'm going to pick an investor in part by their ability to help me grow and scale my team. And what was interesting in kind of the evolution at Frazier is, Frazier's like any other partner. When we came in, they're like, gosh, no matter what, let's make sure we don't blow up a deal. We're going to do org diligence on everyone, but let's make sure we blow up the deal. And it actually it's evolved to, hey, Andy, could you join our management team presentations and talk about sort of the capabilities that you guys and the other Center of Excellence teams are bringing to the table? Because it's actually a differentiator, And so then if you start there in the management team presentation, and then you're like, here's how we're going to help teach us what it's going to take. Like I always say, you guys have 90% of the answers. I bring 10% in the pattern recognition, but I don't know what the answers are until you tell me. People are incredibly receptive, especially the people that aren't about to win Powerball money. So one of sort of my things is you can't talk to just 2 or 3 people. You actually got to talk to somewhere between 6 and 12. Maybe not all those people, even though there's a transactioning happening. You might have to position it as, hey, these guys are just here to help to figure out how to help, somewhere down the line. But below that the 3 people that are going to make life-changing money, everybody else just wants to be in a good situation where they're going to be successful. So they're going to tell you what they need.
That's well said. And I've experienced this sort of the self-fulfilling prophecy of if we position this in front of the management team in the wrong way, they're going to be spooked, or they're going to feel intimidated by the process that we want to evaluate them. And I would say that 100% comes down to positioning. Do we position this as a value driver, as part of our platform? Or do we position it as a risk mitigator? We're trying to make sure we're not backing the wrong people. And that's all about tone in my experience. So I'm curious, David, Adam, would you add anything to that from your own experience?
I mean, yeah, I would agree with everything that you just said, Matt. The only other thing that I would add to it is, when you talk to these people and you talk straight and you talk honestly and you're transparent, you build that trust factor. And that's really important to getting their trust and to having these kind of conversations. So it works for us. We live and breathe that.
Well said. Well said. I'm seeing the 10-minute warning, and also a question has come in from our participants. The question for the panel is, in the hold period, how much emphasis do you put on identifying those talents that can accelerate strategy implementation? So it's a question about sort of where are you looking during the hold period to say who's going to drive growth in an outsized way?
I think it's a great question, and it's I think that is that's everything in terms of really executing on the investment thesis, of an opportunity. And so ideally, we'd like to make those investments as early and often as possible. And to do that, we might not maximize financial leverage. We might take a step back on EBITDA before we take a couple of steps forward. Sometimes I say there's dyssynergies of scale before there's synergies, economies of scale. And that's okay, as long as we go in with the same, alignment and vision for what those investments should be. And then it's really just a function of making sure the team has the capacity to onboard thoughtfully and the right way new folks into the organization.
I don't have a lot to add to what Adam said. I thought that was very well said, Adam. I mean, what you're always looking at is, which we've talked about a lot, Matt, is what does success look like at the end of the day? And what do you need to do up front? And what investments do you need to make? And to be honest with you, we're impatient people in PE. So it's very important to look at your human capital equation on a pre-transaction basis and to act and execute.
And I think with a good point, I think that's in the question is you got to identify what is the real limiting lever on talent going to be, right? So we have an autism platform as well. And so we identified that our due diligence is this: keep retaining behavioral technicians was really the fundamental component of capacity. That capacity, what was going to drive value. So like identifying that, and once you identify that, it's like you got to have the 100 plan what you're going to do with it. So for example, like we've obviously upgraded the recruiting and how we were messaging and the career pathing, and then we pulse survey the employee base, on a monthly basis, the whole employee base, and we're looking at the behavioral technicians. And one of the questions is, do you expect to be at Caravel a year from now? And it was amazing how you'd see the ranges of scores. There'd be areas of the company where the scores would be in the 80s, and you have areas of the companies where the scores would be in the 20s. So it's like putting in those things, and then you're pinpointing where the leadership needs to spend time or where there's going to be a talent gap as a leading indicator. So I think the big thing we've thought about is identifying the risk early and then putting in those leading indicators of potential risk so that you can influence them before they manifest.
That's well said. And that example in the autism space actually, I think, has a lot of translation into other. There are fulcrum roles somewhere in the business. We need to know where they are. We need to put an outsized level of investment into defining success, building that role up. And it's really easy to overlook that and saying, do we have the right CEO? Do the slides look good at board meetings? And it takes a little while. It's 18 months into an investment, that may or may not matter nearly as much as figuring out where deep in the business the value is actually created. I love that.
I would argue it's easier to recruit executive talent than it is to recruit behavioral technicians in mass, right? And so that's definitely worth deep thought.
Well said.
We actually have something in common. We also own an autism portfolio company, and autism is really interesting in terms of the fact that there are so many levers, and so you need a different type of management team in autism, more of sort of a detailed type management team. And I agree with you in terms of the levels that you talked about and how key it is in order to hire appropriately for those levels.
So we have one more question from the participant group, and this one is, how important is it to get the right CEO and management team early in the investment versus later turnover of senior team? And boy, we can all tell a story or two.
Most important? Yeah. I would say, Alex, it's so important that Frazier's philosophy is that we hire the CEO before we actually go look for a platform. Like our model's like the GTCR model. It's like hire the CEO in residence, we build the thesis with them, go find them a platform for them to run. And then oftentimes, if we know that platform is going to be a roll-up, we'll hire a CFO with M&A experience or chief development officer during the search go phase. And then we, talked about the example with Acuity where we hired 4 executives before we even closed, right? Our philosophy is as fast as possible. Because the other thing is, like, if you don't align on that pre-close, it's so much harder to make those changes post-close, right? You end up like, oh gosh, I got to take that for a person to dinner and talk to them about their, how's the night match? And it elongates. Rather, you have to sort of like align on that management team transition plan pre-close has been our philosophy.
Yeah, I mean, I think Andy was spot on. It's always easier to do it up front. I think we've all lived with situations where we've had to make changes midstream, and it's a lot harder, and it slows things down for sure.
Yeah, and I'd say, in our experience, part of what you're trying to do, regardless of what the process is, some investors have a very focused 100-day planning process where management and board are all in a room face-to-face, engaging deeply on matters of growth. Others sort of wait and see. I would say one best practice to pay attention to is how are we surfacing those dynamics as quickly and as transparently as possible. So if it's a transition we want to have baked into the thesis, we talk about it during diligence. And then right after that, we're getting live data on how the management team actually interact, as opposed to simply how they perform when they show up for board meetings. You can lose 3 quarters quickly in missing management team dynamics without eyeballs on that. And I would say, knowing each of your shops well enough, that's important part of the process. So final question. I think we have about 2 or 3 minutes before we're wrapped up here. And just as a reminder to the rest of the group, we'll be meeting again at the top of the 3 o'clock hour East Coast time for open Q&A discussion. So we'll have the panel and a chance to dig in a little bit more deeply and hear live questions from the group. But my last question for you guys as we send off is, what do you want to see get better? So you know the state. I said I think we're at the beginning of the golden age of sort of human capital optimization and PE. What do you want to see happen as we move forward 5 years from now? What are we better at? What are we thinking about more rigorously? And this was not on the pre-list, I'm sorry.
Yeah, I think it's the quality of org or the quality of talent is looked at with the same rigor. You would never not do a deal without a Q of E. Right, we're going to get to the point that the firms that are going to see it or say we would never do a deal without a quality of organization or quality of talent or whatever you're going to call it. That'd be one thing. I think the next horizon, Matt, is like all these things around org analytics, whether that's measuring employee satisfaction or org health or those sorts of things. We're going to tie that to performance. Like we as an industry, and I'm not saying just Frazier, and we're going to be like, public companies are reporting on their 10K. And our companies are going to report those leading indicators in their board meetings because we're going to recognize that the talent levers are as important as various other strategic initiatives.
Awesome.
Yeah, and I think those are really good points, Andy. So we're evolving, obviously, with human capital, and we're evolving in terms of looking at executives and what's going to make them tick and what's going to make them successful in an organization, and we'll continue to do that. One of the things that we've been focusing on more so, I would say, in the last 3 years is taking the next part of that equation, which is the onboarding of the executives. And, one of us mentioned, I think it was you, Andy, pattern recognition. And I love that. I love those terms because, you learn from experience and you learn in the next situation how to make it better. And I will tell you, if you spend the time on a proper onboarding scenario, you will get results a lot faster, and the team will work better. It'll be much better aligned. So that's something that we're focusing on that we hadn't really focused on as much as we should have in the past. We're getting better.
Last word, Adam.
Yeah, look, I'll just add on. I'd say, right, the headlines right now are concerning in terms of just ability to attract, talent, and we're just seeing that across the spectrum right now. And I think it was Andy who just talked a little bit about, the leaky bucket, right, and retention. And so what we're doing across the portfolio is really trying to hone in more on the leaky bucket and retention tools and getting out in front of engagements and some of the leading indicators that can give you signals, right, that you might have a problem, and then using those benchmarks more regularly to measure progress. And then lastly, and we're seeing this already, just elevating, human capital on the org chart. It should be a CEO direct report. It should be a much more meaningful strategic role in the organization versus functional and tactical, perhaps buried and underneath the finance organization.
Well said. Well, guys, great conversation today. Look forward to following up with you here at 3 o'clock. Thanks to everyone else for participating. Look forward to chatting a little bit later.
Thanks, Matt.
Thank you.
Take care.
Thank you very much.